self-explanatory reason not to leave your investments with dinosaur companies. Intel announcing they're cutting jobs, they're cutting costs, and they cut their dividend. So you cut the dividend, the stock is going to tank. Like, the investors are holding the shares to get paid either at a future date for a greater price when the value of the company is going to appreciate, or most of the time, if you're like some blue chip level stock, been around, paying a dividend, that's setting a lot of the price that the shares are worth at any given time. Cutting that dividend just completely tanks the investors' faith or desire to hold the shares any longer. So they dump the shares even more, because why are they going to hold for a lower return or no return if they cut the dividend entirely? So you have to watch these things, and it's a big deal. Like, you can't leave your investments with dinosaur companies that have been, maybe 30 years ago. If they were a big name, you got to be checking in on them. Intel definitely been losing the game to Apple's decision to leave their chips and things out of their MacBooks the last few years. If you're not following these types of moves in the companies you invest in, like, this is what happens. You can get caught with your pants down. You wonder, why is my stock down all of a sudden? You haven't been following along. So stay up to date. Stay on top of the companies in your portfolio. If you haven't shuffled out old names or kept up with your portfolio in general in a while, like, it's a perfect wake-up call day to go and check. Obviously, if you don't want Intel, if you have that in your portfolio, I would probably just, it shouldn't have been there already. So I don't know, get rid of it. But not my advice, I guess. And probably start looking into, if you're in technology, get into bigger names that are for sure going to be winning that longer run right now that we're in. We're in the 2020s. Who's been making the best technology products? If you're going to stay invested in that sector, and that's obviously more on the Apple side, that's a safer bet. That will be in the way that Intel was a safe place to keep some money for probably the last 20 years, paying attention to how Apple's handled technology and products the last few years. Now, they're now like what you'd put number one, like, as a technology bet. That's the place to keep. They're paying a dividend. It's very small. It's not anything to get excited about, but they will continue to rise as the shares go up, because the iPhone's going to keep costing more. So it's, in a way, it's going to track with the way that the dollar moves, and it's one of the largest companies in the world. So it's a good play in that sense, that, like, you're parking money in a safe spot that will kind of trend up with the market itself. Don't leave these dinosaurs sitting around in the portfolio, and definitely shuffle things around. This is a big day to take a hit if you had to wake up and realize that you should have been shuffling this all along. So talk to you later.